Welcome to another edition of Learning About Loans. Today I have with me Miss Krystal Miles. She was always knowledgeable, super impressive, and I'm just super grateful to have her in my world. Today we are going to talk about a couple things, whether it be, well, we're going to start with Freddie Mac. Then we're going to talk about a program for Freddie Mac called Borrow Smart. And then we're going to talk about just in general down payment assistance programs, also known as DPA. So it's really a down payment assistance is what we're going to talk about today. And obviously we got to define a few things real quick out of the gate so you know where we're coming from. So Miss Krystal, with that said, tell me about kind of, knowing that we're talking those things. I think you said that you want to talk about Freddie Mac first. Who is Freddie Mac? What the heck is it? And why is that important for today's conversation?
So Freddie Mac is one of the government entities that purchases loans after they close to help the inflow and outflow of money so that lenders can continue lending money to borrowers. The other government entity is Fannie, so we consider Fannie mom and Freddie dad. Um, but they help lenders continue to have the money to keep lending to people, and they, help guarantee the loans on the back end and purchase
So
them.
Fannie Mae, Freddie Mac, quasi government owned. They are there to help lenders, like mortgage lenders like us. They then buy the loans from us after they close because we don't have, if we do $2 billion in a month, every month that ends up being $24 billion a year. We don't have $24 billion, at least I don't, to lend. So Freddie and Fannie buy these mortgages afterwards. So then we can go back and lend and make new loans. You cannot do actual mortgage directly with them. So if a homeowner's watching or somebody wants to go directly to Fannie or to Freddie, they cannot. That's not their purpose. Their purpose is to help support mortgage lenders and buy these from us. So Freddie Mac, today's topic, we're going to hone down, and they have all kinds of, when people say normal mortgages, they're typically talking Fannie and Freddie loans. Those are like conventional, conforming type loan amounts. Um, Tell me about, and this is the part I'll admit complete ignorance on. I don't know Borrow Smart. Matter of fact, we had to push stop after we started the recording because I forgot the name of it. So that's how little I know about it. So tell me about what is Freddie Mac? So it's a Freddie Mac product. What is Borrow Smart?
Okay. Borrow Smart is a grant program through Freddie Mac. It is targeted to individuals that make under 80% of the area median income. And there's actually ways to look that up because it is area specific. So if you want to know if you would qualify for something like Borrow Smart, you can actually go to their website. I do have it pulled up. I'll show you in a
Hold
minute.
on one sec before we get to the website, just to make sure I'm clear. So to restate what I think I heard, two things. One, let's start with what is a grant? You said it's a grant. What is a grant? What does that mean to me as the home buyer? I know what it is, just for the record. But what is it for those listening, whether real estate community or the borrowers? What does it mean to be a grant? What does that mean?
A grant is money that's provided to the borrower that they can use towards down payment and closing costs, and it's something that doesn't have to be paid back. So that's one of the main differences between a grant and down payment assistance is a grant is actually money that's just given to you that does not have to be paid back. You just have to fall under certain criteria in order to qualify for that.
That's awesome. So it's not a loan. You don't need to pay it back, and there's terms. I'm sure we'll talk about that in a minute. There are
Yes.
conditions to where you don't have to pay it back. But if you follow the guidelines and you buy a home, grant is air quotes free money. And so it's a grant offered by Freddie Mac. And then you mentioned that it has area median income. It's AMI is the acronym in the mortgage world, that they
Correct.
have to be at or below a certain, what is it, 80% of
Yes,
the average
80%
median
of the
income? Is
area
that
median
right?
income. Yeah, so for example, if the area median income is $100,000, most people in that area make $100,000 or more, then you'd have to make $80,000 or less to qualify for a program like
And is
this.
that household income, I assume?
It depends. It
Okay,
depends.
so this is where we're going to start getting technical. So the point is, if somebody now, if you make too much money, as in the case with a lot of these grant programs, and even down payment assistance programs, if you make too much, sometimes you do not qualify for the program. So this is where I'm going to give it back to you, and you're going to start explaining the borrower smart. And so, by the way, is this grants typically show up as, and I'm going to use air quotes here, second mortgage. Well, I shouldn't use air quotes, but they're second mortgages, meaning like you do a normal mortgage for the first and then the grant shows up kind of as a second little piece to it. Is that correct or am I
Yep.
wrong?
Grants don't show up as a second mortgage. Down payment assistance programs can, and we'll talk about that in a minute. But a grant is just a credit. It's a
Okay.
credit given to the borrower because it's not paid back. It does have to be disclosed and shown on official documentation, but it's just a credit.
Sweet. I love it. Free money. Let's go. You take over the
Yes.
screen or
And
take me where you want to go next.
okay, and Borrow Smart in particular, it is based off of the applicant because it's a conventional loan. So whatever the applicant's income is, then it would be eligible for the Borrow Smart program, which also is likely eligible for the Home Possible program because that's also a Freddie Mac program where you have to make 80% area median income. And with that being said, the advantage of having the Home Possible is that you have lower mortgage insurance typically, and the interest rates are a little more favorable because it is geared towards lower income earning people in their new home.
So just
And
to be
so,
clear, you don't have to use the Home Possible with Borrower Smart. You're just saying oftentimes if you qualify for one, you might qualify for the other. So if you do qualify for Freddie Mac's Home Possible, which does offer features like lower MI and some other benefits, if you qualify for that, it's prudent to then explore the Borrow Smart grant program with it. Got it.
correct,
Okay,
correct.
keep going.
All right, now I'm going to share my screen just to show this is a website that you can go to, and you can just Google Freddie Mac Borrow Smart and you can find this website pretty easily. But what this website does is it allows you to plug in an address and it'll tell you what the area median income is. And I believe there are some follow-up questions as well about your own income to let you know what you qualify for and how much grant money is available to you through this particular program. So you would just
Fantastic. So
come,
we're not going to go step by step because again, this is
no,
unique to you as a human, right? Who's looking to buy a home. You put in the address, and whether it's your address or what house you're going to look at to make sure you find the area, it then tells you the area income that you need to be under. Is that what I heard you say, Crystal? Correct? It tells you like, hey, in this area,
correct.
the
Yes,
the AMI is X, and then secondly, it'll then ask you questions about your own income, which obviously you will need to put in there to determine if you're eligible for that piece. Now, earlier you said the applicant's income, meaning so is this the household or is this whoever's applying for the mortgage? How do they determine that qualified? Because for those listening, qualifying income doesn't necessarily mean real income. So for example, if somebody's a salary position and gets a big bonus, but we can't use it because they just started the job, qualifying income is a salary. Yes, they make more, but for the mortgage world, qualifying means what we can use. So Crystal, my question to you, is it based off an applicant for qualifying income to make sure this AMI is met, or is it based on a household income?
this one is based on just the applicant.
Wow. So you can be married to somebody who's making $1 million, being a heart surgeon, and yet you can still qualify for this program if you're at or below as a single applicant below the area median income.
Correct.
Cool. Keep going. This is great.
Now, that is different than most down payment assistant and grant programs because the majority of them do go off household income. And what household income is anybody over the age of 18 that is working and whatever the income that they earn. So you do have to watch that, especially if you have older children that are still living at home and maybe working. We do ask questions to verify that.
Yeah, so this is unique, guys. Just I'm going to restate it because that is such a big deal, and I don't want you to miss it. Most or a lot, I'd say the majority do go off the household income. And like Crystal said, if you got a 22-year-old, in the house who's making money, may not live with you on the next house, but they live in your current household, that goes against that qualifying income for qualifying for this product or for most products, not this one. This one is based on whoever's actually on the actual loan application. Good job.
Yes.
All
And
right,
with
keep
that
going.
being said, all of these programs, whether it's a grant or down payment assistant programs, they will require a first-time homebuyer course. There are free courses that are available, and they do have to be what's called HUD approved. But if you're getting any kind of assistance, whether it's grants, down payment assistance, you will have to take that course, which is helpful because it does explain home ownership and lets you know what to expect. That way, before you're actually under contract and in a home, you know what to expect moving forward and the responsibility of you as a first time home buyer.
And so with that, do you have to be a first-time home buyer to qualify for this program?
For the Borrow Smart, yes, but there are down payment assistant programs that do not require you to be a first time home buyer. And that's something that you can discover with Freddie Mac's other program called DPA One. So Freddie Mac has a website. It really is geared towards real estate agents. Look up down payment assistant and grants in any city in the country.
Gotcha. So this is
Did
the
we get
Borrow
frozen?
Smart is for first time home
Sorry, I
buyers.
think we got frozen for a
There
minute.
are DPA one, as you just pulled up very quickly.
Yes,
That is another down payment assistance. I love the down payment programs all in one place. So they can go there and look, but to Borrow Smart, what we just talked about is first time home buyer as defined by somebody that's not been a homeowner for the last 3 years. Is that correct?
right.
So if
Yes, that's
somebody owned a
correct.
home 8 years ago, but hasn't owned in the last three, they're technically first time home buyers and can qualify for Borrow Smart. If you
Yes.
can't and you want to explore other options, this DPA one, now is this only Freddie Mac down payment assistance or is this other DPA programs in there as well?
No, this is all like the state programs, city grant programs. So that's why I really like this website because you can look up whatever assistance is available in your area. Now, as I mentioned before, this website is geared more towards real estate professionals. So, if your agent isn't aware of this, let them know they can sign up. It's free and they can look at what's available in your area as far as assistance for you.
That's awesome. And certainly the Krystal or the mortgage marketing or both, we're certainly here to help. But I think that's a great, wonderful program. For Borrow Smart, real quick, before we just I don't know if you're done with that, but I do have a few follow-up questions. Is it just can you use it for any program, or I know you said like it's often used in conjunction with the Home Possible. Can you use Borrower Smart with any program out there?
No, it's a conventional Freddie Mac loan,
So you got to do your first mortgage with Freddie Mac as well. So
and it's got
not
to be
FHA,
conventional.
not VA, not USEA, not a
Correct.
Fannie Mae product. It's got to be a Freddie Mac product that they
Yes.
qualify through. So as a just if you're listening as a real estate professional or a potential home buyer, you don't necessarily know or choose what unless you're talking to a lender that says I must have this. That's where you do put a lot of faith and trust in a lender to know about these programs, to present these programs as options to you. Because unless you know to ask for this, a lot of lenders, and again, I've been doing this for 20 years, and I have wonderful folks like Krystal on the team that do this stuff to where it's like I don't have to know all this stuff because I have amazing people like Krystal. So that's why this is so important that you do talk to somebody because it does have to be a Freddie Mac product. So as far as the rest of the questions that most people might ask, like credit, qualifying, income, DTI, I assume it's all just based on as long as you qualify for Freddie, you're eligible for Borrow Smart, as long as the median income is what it needs to be for that area. Is that correct?
Yes, that's correct. And
Cool.
with other down payment assistant programs, they typically have a minimum credit score threshold of, on average, 640, but I have seen some go down to 620 and even 600. There's some national programs I know that go down to 600, but you do have to watch, the minimum credit scores with a lot of these programs because they do have minimum thresholds for that.
And to be clear, Freddie Mac, it is they're not going to let typically not all. I mean, it's we can't say this for everybody, but generally speaking, you're going to need this credit score to be 640 or higher to get a Freddie Mac approval. Crystal, what about the grant? You don't pay it back; it's free money. Do they have to live? A lot of times with these type of things, you have to like there's criteria that you have to do as a homeowner. You have to live in the house for a certain number of time period, or anything that when do I is it free money and just after closing you're done? Like give me kind of the criteria around that.
So you do have to be a first-time home buyer. You do have to live in the home as your primary residence. And typically, unless there's extenuating circumstances, you have to live in the home for a year. And then if you want to turn it into a rental property and go purchase another home, that's what would be considered acceptable as your primary residence is a 1 year time frame.
Wow, I
Now,
didn't realize it's only 1 year. So a lot of these I've seen programs where they make you live there for 9 years. Like,
oh,
holy smokes, that's a commitment. This one's just live there for a year, which is normal, by the way. If you buy a house as a primary property, you're expected to live there for at least a year. You sign papers saying that you'll live there for at least a year. So that's amazing. How much of the grant is it a percentage? Is it a dollar amount? How much free money do you get?
It is 1250 right now, 1,250.
$1,250.
Yes, I have seen where it can go a little bit higher if you have lower income, but I would say the majority of the Borrow Smart grants are $1,250.
Free money, basically.
It is,
So
yes.
free money, live in the house. You get an extra $1,250 just for being awesome and telling a lender that actually knows about this product and program that can help you and navigate the waters and put you in that program. Krystal, that is freaking awesome. What am I forgetting to ask? What else is super important that we need to know about this, or what else do you think is worth at least talking about?
Um, Nothing particularly with the Borrow Smart, but as you had mentioned, other down payment assistant programs, they do have a longer time frame that you have to live in the home. I know in Texas where our office is, a lot of the down payment assistant programs, you do have to live there for 3 years before you can sell or refinance, or the assistance is paid back. But that's something to discuss with your loan officer. Hopefully that's us. But we can tell you the programs and the restrictions and the requirements for the particular program that you're interested in.
That's amazing. Krystal, you're a wealth of knowledge as always. I just, again, so blessed and thankful that you're here and you're amazing and you're incredible. Borrow smart, guys. If you need it, you can reach out to Krystal as always. And we'll see you next time on Learning About Loans.
Thank you.